Regarding the Swiss equity market, we first have to take a step back and distinguish really the Swiss economy from the Swiss listed equity market. The Swiss economy is about 500,000 registered companies, out of which about 200 are listed, and out of those 200 we have more than half that are almost illiquid from an institutional criteria, and out of those 200 we will have 5 that make up 50% of the total market cap. We really have to distinguish the listed economy from the economy as a whole. And then we have to divide it into two sub-universes. We have the large cap, 20 companies that make up 80% of the total market cap, and the remaining 200 companies, let's say 180, are making up 20%. In the large cap, we have mainly defensive stocks in defensive sectors, so that's above all the 2 big pharma, Novartis and Roche, and we have Nestlé. As we start 2026, I would say that we start from a high point because we had a good 2025 year with a performance of 14% for price and about 3.5% from dividend effect. As usual, the Swiss market has a decent dividend distribution. Then if we divide for the two sub-universes to take a look at 2025 and 2026. So we have large cap that had in fact barely stable earnings growth last year, but they had good performance due to multiple revaluation to the upside. For this sub-universe, growth was about 0% to 1% last year, and we expect it for the moment to grow 7% in 2026. Then if we go to medium caps, so we had a year that was quite decent in 2025 with a 4% earnings growth, to which on top of that we had also a multiple expansion that was quite sizable. But then for this particular sub-universe, as usually is the case, we have a higher growth expected for this year at plus 14%. That's a bit above the historical average. So if we have this earnings growth, we have to apply a valuation to it and take a look at where it stands right now. So for both universes, we have a premium of around 20% to historical average. So we have the large cap trading currently at 18 times, and we have the medium cap trading at 24 times. Of course, it's also higher because they have a higher growth, and we have some high quality names too. So higher growth with high quality means higher multiple. I would say that we start the year with quite some optimism, as is always the case. So in January, investors and analysts are full of hope that everything will go well for the year. And we know that at least until all the figures for the past year are published, so let's say into February or March, we have optimism, then we have some kind of reality check. What we know from last year too and the past years is that what can impact negatively the valuation and the earnings is obviously geopolitical aspects. And we have quite a few to worry about. And whenever it happens, some kind of economic disappointment and not so much growth. I would add to this that for the Swiss market, inflation is not that much a problem anymore, and interest rates are not a problem that much anymore, as the reference rate is at 0. So normally we don't have a positive driver from this for multiples, but we also don't have an inflation problem into the interest rates.